There's one trader in this book that says, I haven't invented a single thing. Nothing I do is new. I haven't invented a single thing. But what he's done is he's taken different things from different people and found out what works for him. So ultimately, you can learn from other people, you can take from other people, but ultimately you have to find things that you believe in, that fit your personality. You got to make it your own. So don't think that you could just go and buy a system or copy somebody else's approach and you're going to be successful, because you won't have their conviction, you won't have their particular talents to make that strategy work. You've got to find your own strategy, even if it's learned from other people. But whatever you put together as your methodology has to be your own.
This is Alex Cleanthous, and today we're talking with Jack Schwager. He's a legendary market historian, he's a trading psychology expert, and he's the author of the iconic Market Wizards series. Jack is also the co-founder and chief research officer at FundSeeder. He's portfolio manager at the ADM Investor Services, a diversified strategies fund, and one of the most influential voices in modern trading. In this episode, we talk about what the best traders do differently. We talk about trading psychology. He shares some insights from his latest book that is going to be coming out in the next year. And we also talk with Jack about what he's personally learned after decades of studying the top 1% of performers. I hope you enjoy this episode and make sure to subscribe to get the latest episodes as soon as they're released. Now, let's get into it. So Jack, how did you get the idea for this book? Yeah, because this book called Market Wizards, I've been given this book from 3 separate people who are probably the most successful kind of people I know. And they have the most amount of wealth. And yet, like, this is the book that they suggest that everyone should read. And so how did you get the idea? Because it seems to have had a pretty big impact across the space.
Yeah, it has. And I say this reluctantly because it sounds like I'm just blowing my own horn here, but I can't tell you how many hedge fund managers and very successful traders, have told me that either when they got in the business, the book was given to them, or they've given it out to their trainees, and so it's become kind of a sort of a Bible of some sorts within the I guess what I call the successful trading community. And so the idea, everybody thinks that Market Wizards, and we're talking for your audience, the first Market Wizards book, there were a number of them, but the first one that you're referring to, I wrote it in 1988. So we're talking 37 years now. So that book was not my first book, and people assume it was. My first book was actually an analytical book, like a 750, 800-page analytical book on the futures markets. And that book did well for what it was. I didn't write it to do mass sales, because a book that intense is just not intended for a big audience. I was just trying to write the best book out there in futures analysis. Anyway, that did relatively well. And a few years later, I got approached by another publisher, and they wanted me to do a whole series of fundamental type analytical books. And, sort of be the editor-in-chief, writer, one in gold, one in grains, one in each type of market. And I had, just to back up, to do the original book was pre-PCs, at least they were just in the infancy, and I did it without a PC. And I had taken a sabbatical to do it, and it was an enormous chore, and I said, I just no interest in doing that. So if I ever do another book, I want to do something more mass audience. And they asked if I had an idea. I said, yeah, and at the time I was a director of futures research, which is a more than full-time job on its own. And that's why I didn't do it. But I had this idea that I knew some really great traders. And I thought, gee, it might be a fun idea to go around the country and interview like the best traders and see what differentiates them, sort of pick their brains. And that was kind of the catalyst. I mean, I wanted to do the book, but I didn't have the time. So that book got done nights and weekends, other than the trips I took to interview the traders, which I kind of did some on weekends, or I had day off here, there, off there. But the bulk of the work, which is taking all these interviews and transforming them into a book, that I did really literally nights and weekends. I did spend some all-nighters. I did kind of spend my weekends doing this. And that's how the first book came about. So I guess the origin is that I was prompted to do another book, and I knew these great traders, and that was the idea.
So you were the director of the Futures
Research,
research, right?
yeah,
And so you were already essentially kind of in the industry,
yes,
and then you started just to publish some books. And so the first book just was like a more kind of technical book, and the second one just was a more of a mass kind of market book. In constructing the second book, how did that change how you invested and how you traded?
well, I get it sort of happened, simultaneous. I by that point had some experience on my own, and I don't know how much of it was the influence of the book and how much was just experience. But there was one line I can think back of one line with Bruce Kovner of Caxton Corp, and I interviewed him back in the earlier days when he was trading for Commodities Corp, and he had one line where he said, "I always know where I'm going to get out before I get in," which to me is probably my favorite line from all the Market Wizard books I've written, and one which in one sentence captures so much wisdom. So I kind of do live, any trading I do, I live by that rule. So if I do an order, uh, I put in a stop at the same time. And there's so many reasons why that's a good idea. We can go into it if you want. But that is like a good example of something that I can think of a direct line in the book, and it affects my trade. There have been other instances. I remember, for example, Marty Schwartz saying in our interview, if you're ever really worried about a trade, and let's say the market closes really strong on a Friday and you're short, that type of situation. But if you're ever really worried about a situation and then the market opens up, typically this would be over a weekend situation, but it could be overnight. And then the market opens up and the market lets you off the hook, to use his exact words. The market lets you off the hook. Don't get out. And that has occurred a couple of times, in my own trading, where I remember like one instance, S&P was in some sort of broad range, and I was selling into what I anticipated would be resistance. And as I was scaling in, I was almost totally in, not completely. And a report came out, and it was one of those unemployment reports that there was just nothing positive for the usually they pull out, well, there's this one quad, but everything about it was negative for the market. And the market sold off, and I think, oh yeah, I got it. And then sort of about a couple of hours before the close, it stopped going down, started going up, kept on going up, and actually closed up on the day or something like that. And I remember, I remember feeling, oh, I'm dead in the water in this one. My son was over the weekend. I was telling him this trade, I'm dead in the water. Then Sunday night, the market opens up, and it opens up lower. And I swear, I think of Schwartz's line. And I said, okay, I'm not going to do anything. And sure enough, the market, kept on going down.
Right.
So there are instances where things happen in the markets, and I think back of things I got from the interviews. I mean, there've been others, but those are a couple examples.
A big part of what you talk about is, well, the big thread seems to be psychology. Yeah. So there's certain strategies, of course, right? And everybody has kind of different strategies, but it does seem that a characteristic of these super successful kind of traders is their psychology. Yeah. And so what did you find in terms of the type of psychology that these kind of super successful people had?
Yeah, there are common traits in terms of psychological attitude and emotional makeup and all of that. One thing that's common is that really successful traders seem to be much more immune from emotion when things are going against them than you or I or most people would be. I remember Paul Tudor Jones, and he wasn't speaking about himself. He was talking about Eli Tullis, who was a cotton merchant that was his mentor. And he related in our interview, this is one of the things that made a big impression in his life, in his career. And he talked about how he was with Eli one day, and the market was really went against him. He had a terrible day. He lost millions or whatever. And he had some guests in that afternoon. And Paul says, well, like you would never know the guy lost a dime that day. He was completely just normal. And that sort of made that impression on him. And I find a lot of these traders, they could be in these extreme situations and just are very cool and controlled. And I think a lot of that is inherent. It's inbred. I'm doing another book right now, and one of the traders, and maybe the best trader in this book I'm working on, maybe the best trader, the most successful trader I've ever interviewed. I'll go that far. And he can be talking about, well, what makes him different. And he mentioned a couple of things. One was, the ability of being intensely focused, which is another common trait, by the way. And one he said is he's just born with this thing of being extremely calm. Like he doesn't get fazed by anything. And he says it's just the way I was born. It's just my genes. He's not saying it's anything that he deserves or did, but it's a trait. People ask, are great traders born or made? And I think to some real extent they are born. They have the right psychological makeup, or they have the right sort of intuitive sense to be able to pick up things that other people miss. But they have some traits that just make them unusually suited to be traders. And so those are a couple of things, like I said, focus, emotional calmness. Then there's other things like the ability to be very disciplined. So you have to be rigorous. You can't deviate from what you know are the right actions, and whatever your methodology is. And if you do, the market will usually get you. So to have the discipline, even when it's difficult, to follow your own rules. And even great traders don't always manage to do that, but they do have a better ability to do that than most people. And I'll mention one more, and that's flexibility. Really good traders are able to change their minds on a dime. They're able to turn on a dime, which most people can't. Most people hope their position is going to work. And if they're really good, if they're good traders, and they realize that they're in the wrong position, they'll get out. But the really great traders can not only get out, but if they realize they're wrong, they can flip the other way. And I don't want to take up the whole interview on answering this question, but
this is a really good question, because the psychology is the thing, because everyone has systems, everyone has strategies. There's so much software out there, and the technical indicators, and there's all these different things. And then, but it's all about the trading strategy and the discipline just when things are not going your way, right? Which is, so you said something interesting, that the markets are never wrong, except opinions often are, right? And so this is a thing where kind of the market has a way to show you what's the truth, and it's oftentimes not what the consensus thinks, right? And so these successful kind of traders seem to be able to win just when everyone else is losing, right? And so how do you think that is? Or why do you think that they can actually succeed kind of at times that the majority can't? And the majority are also experienced, like they have all of the same information. It's the same exact market, and yet some people can succeed in that market, and the majority just don't.
Yeah, so part of it is what I started saying. The last question was this flexibility, this the ability to change their mind and not get hung up on hope like a lot of other traders do. So they may have an opinion, or the best quote here, Peter Brandt in Unknown Market Wizards has a line. His motto is sort of strong opinions weakly held, weak, W-E-A-K, weakly held. So what he's saying, basically, he has a strong opinion when he goes into the trade, but market doesn't have to do much for him to abandon that opinion. So, that's the ability to, as he says, to be a weak holder of your opinion is a good trait, because it allows really good traders to get out of positions before they do much damage.
Yeah. And so was there something that you found that was something which you didn't expect? Yeah. So some approach or some type of thinking, or was it all kind of what you thought and it was just
I'll tell you,
that they were executed just better?
And I'll tell you, the thing that was most unexpected, which kept on coming up amazingly in every book, multiple interviews. So you figure you're interviewing these guys who are really the just far superior performance track records to even successful, traders. And you figure, well, they probably were always okay, or but so many of them blew up not once, not twice, or even three times. So I was surprised how many of these traders who were ultimately super successful, actually, not all of them, of course, but a fair minority of them had multiple failures before they finally got it right. And in some cases, the stories are so extreme that you just think, gee, anybody else would have given up. Why the hell did they? And I asked that any of you, didn't you think that maybe you just weren't cut out for this and you should give up? I mean, so that is what was surprising. And I mentioned that trader that in the book I'm writing now, he actually, that chapter will be called "The Fifth Time is the Charm," because he literally blew up 4 times before he became enormously successful.
That seems to be a common story for any kind of self-made, kind of successful person, right? It seems to be the same in business, where your first business is not going to be the one, the third business is probably not even going to be the one, and so maybe the fourth or fifth one. And so it seems the same for trading, but for trading, you lose a lot of money. And so every time that is going to blow up. And that can happen in business, but for these people who are succeeding at the highest levels, they'd probably have to crash pretty hard before they hit that highest level. And so what was the biggest amount of money that was kind of just lost as a part of these experiences, let's call them, of learning?
Well, the good thing is in these blow-ups, usually the amounts are not large because they're at the beginning of their careers. So it's everything they have, but it's a small, it's not a huge amount.
It's funny though, because it's everything they have, and that still applies. It's just a larger amount of money, the more money that you have, but it's still everything,
Yeah,
and
so in some
they
cases,
have to start again every time.
Right. In some cases, it's only, like $5,000 multiple times. In some cases, like the trader I've been talking about for this book, in his case, it were $50,000 chunks. He was borrowing from his dad, So,
wow.
Yeah. So
come on, Dad. I just need one more. Okay, it's 200K. Trust me, and the next one is going to be good. And then he probably and then he's come good, hasn't he?
Yeah, yeah. And in his case, he got to the point where he said one last time he promised himself, "This is the last time I borrow. Could ask my dad," and he lost that. But he was also doing
the last time he said, "All right, this is going to be the," and then he lost that one too,
and
then he still
again.
came back again after that.
He lost the 50 again, and but what he was doing, he was making money, and then blow it all on one trade. But he was doing this deep research, and he was posting it on this online trading community, and there was like a niche in that community of the best traders, and I guess they talk among themselves, and he had mentioned why he's not trading, and one of the traders just say, I'll loan you 50. Here, I'll loan you $50,000. Pay it back whenever you want. No, because he had gotten value out of the research, and that was the one that made it.
Wow, I don't think we know his name, but are you able to just say kind of how much that he made as a result of that last 50?
Well, that 50. First of all, nobody will ever know his name except me and I have a co-author in this book, George Coyle. Nobody will know his name because this is the first time. The only way he agreed to do it, he didn't want the notoriety, and the only way he agreed to do it was to be anonymous. Of course, we verified his track records. But he wanted his name to be anonymous. And
so what did he turn that 50K into then, since he's anonymous?
Right now, as of now, it's about 500 million.
500 million.
Yes.
And what kind of a time frame, was that?
Yeah, actually, about let me think, just under 10 years. Under 10 years.
Pretty good. That's better than most
10 years,
startups.
10 years.
That's a very good trading record. And so his father has gotten his money back now, plus interest, plus some. So let me ask you, you have been interviewing successful traders since like the 80s, right? And so the first book was 1988. Oh, sorry, the second book was 1988, but the first kind of mass market book, it was 1988, which is, was that 36 years? Is that the right math? 36 years ago now? 37 years ago.
Yeah.
And so you've interviewed.
It was published in 89. I wrote it in 88. It was published in 89.
So you've interviewed a fair few people over that time. How much has stayed the same? How much has changed?
The markets have changed enormously, right? We both know that. In fact, the changes have been so enormous. You've gone back in those days, back in the first Market Wizards book. I was interviewing a lot of futures traders, and we're talking about trading pins, right? Those things virtually don't exist anymore, and we've gone all electronic trading. At the time I did the first book, where I was talking to people whose careers predated. Well, we had PCs in the 80s. They just became beginning early 80s, I guess, was sort of the beginning, but they weren't. You still were dealing situations where people didn't have computers on their desk. You didn't have chart. Yeah, back in those days, we're talking. You'd get a chart book once a week and that type of thing. It was and forget about all the internet. There's no internet, right?
Mm.
So we're talking largely pre-PC, no internet, and no electronic trading. So those are enormous. And also, that predates, you had hedge funds, kind of a very minor influence. We've gone from that now to supercomputers, AI, multiple quant firms with several hundred PhDs in math working for them, or physics, or astrophysics, or whatever, those computer science, etc. So we've gone from that world to this world, and so there have been enormous changes. However, the people I interview, you wouldn't know that the financial world has changed so much. So many things don't really change. And amazingly, this book, for example, I'm working on now, as was the last book, were solo traders, not hedge funds. You're just guys on their own, trading from their home office or whatever. And you would think single traders like that would have no chance. How does a trader like that compete against a hedge fund with 200 quants, right? It just doesn't seem possible. And not only are they competing, but they're like getting these track records that are just miles better than what these big firms are doing. Of course, they have the advantage of starting small, and so not having to trade billions is itself an advantage, of course. But still, I find it amazing that with all these changes we've seen, which would seem to argue against the individual trader having a chance, I'm finding individual traders now that are as good, if not better, than I've ever found before.
And are you finding that they're approaching the data in a different kind of way than other people or than other companies are? Because there's an enormous amount of information available. So a solo trader these days has so much more information than anyone just could have had like in the 90s even, right? And so how much information is it, and how much is it strategy, and how much is it psychology?
The strategies actually, in many cases, are not terribly complex. I mean, they're not complex. They're basic. So it might be a strategy like waiting, looking for stocks that have these enormous 3, 4, 5 day moves up, and a lot of those stocks, they get these up moves and they collapse again. So for a couple of these traders, at least they're in one of their early strategies, and sometimes a strategy they still use is going short into these really powerful rallies. But of course, they've studied them. They've studied thousands of these examples, and have developed a sense of where to enter these trades and how to protect themselves and so forth. So it's a trade that is very simple in terms of you could just explain what it is, right? It's very simple, but to actually do it, so you're going to go sell a stock that's up 500% in the last few days. So that's a lot of people. Not many people can do that.
That's the hard part, isn't it? Yeah, that's the thing, is when everyone is going one direction, for you to go the opposite, just when everything is going like it's what. Yeah, so I think that does seem to be the conviction, doesn't it? Is that they go against the market at the right time, and they set up the right kind of settings just so they can basically exit quickly.
And sometimes, give you another example, and some other traders, or one trader in particular, I'll think of, sort of buying breakouts, but they've got it defined. It has to be a stock that's has a really big up move on the opening. It's a stock that has super high volume on that day. It has to be a meaningful news. So he's got these rules that define what kind of breakout it is. Because if you buy every breakout, it's not going to work because you get so many false breakouts. But he's defined which breakouts really to pay attention to. And so the strategy is simple, but he's defined a way to make that breakout strategy work, even though it's not a very complex. And everybody kind of has to find their own patterns or their own strategies that work for them.
And I guess for the person who you're speaking about, it turned 50K into 500 mil. So
well, not that. So
this a few times.
This is another trade I was thinking when I was giving you the breakout example. That was another trader, but still.
Okay, but I guess what's interesting is that it's like McDonald's. You don't need a lot. It's just a simple system, a simple algorithm that just works for you, right? And that can cost a lot to figure out because to learn, you're probably going to have some losses, but they stick with it and they have the commitment that they believe still that it can work and they just kind of continue at it.
Yeah, and it's almost, I would add, it's almost never the initial strategy you start out with. So
it's almost never the initial
strategy they start with, right? So it seems like almost everybody has to go through a process where they start at markets, they start trying to do things, and whatever they start with usually doesn't work, and then they eventually figure out other things that do work.
It sounds like the story of all successful people who actually succeed, right? It's like they start with a plan. The plan fails at the first step, and they have to kind of adapt super quickly, constantly all the time. And so it sounds like that is the common thing. So let me ask you a question, yeah?
Sure.
So with all the information that you have now, yes, if you had all this at the beginning of your career, what would you have done kind of differently? Because kind of now there's so much information which you have about kind of how kind of certain people have done certain things. So what would you have done a bit differently had you known everything that you know now?
The main thing I would do, first of all, I started out personally fundamentally oriented because that was my background. I was originally a fundamental analyst, and being a research director, a lot of it was fundamental. But I also at that point started to pick up technical. So for me, I ended up finding out that we can go into it if you want. But for me personally, I had problems with the fundamental side. I found it very difficult to marry that with risk control. So if I ended up gravitating, to purely technical. So if I was starting out, I would start out with technical. Personally, I would start out with technical as opposed to fundamental. And the other thing for the first few years when I was trading, and trading was I was never a trader. I was always doing other stuff. Trading was nothing more than a side thing that I do when I had time. I didn't have any knowledge or feel for or understanding of risk management, and so that emphasizing risk management from the very beginning would be something that I would do. So the rule I said, always know where you're going to get out before you get in, having a stop in every time I put in a trade, I would do that from the very beginning. It took me a long time until I realized that's what I should be doing. Having said that, I would point out that I am not a good trader myself. I just know stuff, and I trade. Like I say, I don't. I also I should say that one of the important things here is you have to really have a passion for trading. That's another thing that comes out. If you talk to these people, they are really passionate about trading. They love the endeavor. They almost live to trade, to use a phrase that I've come across. And I never had that feeling. So to me, I don't have the particular right makeup. Like I talked about the importance of being able to be calm and non-emotional. I'm not calm and unemotional. You have to be patient, patient to wait for the right trades, patient to stay with the right trades. Again, I'm impatient. I'm by nature an impatient person. A lot of my inborn traits are not conducive to trading, and nor I never did have that passion for trading. I like the idea of being expert at it, but I realized, hey, I'm not expert at it. This isn't I'm good at putting together. Let's say I'm good at writing books, and I feel I have a superior edge there. but I don't feel that way about trading. So trading has never been my main thing. It's ironic. I write books about great traders. I write books that people tell me got them in the business and they were made them successful. But for myself, it's never been that path. But that's because I've never seen trading as my life goal or ambition. And because I recognize I think here's an important thing in general. I think people say follow your passion, and that's only half right. And for me, again, I didn't have the passion for trading to begin with, but it's not only enough to follow your passion. You actually have to find something that you really like, following your passion, but that you also have skill at. You need both. So I think we all have different skills and talents, and if you stick to what you're good at, you'll be a lot happier than if you try to do something that you have no particular edge. I have no particular edge as a trader. My edge is I know a lot about trading, and so maybe I could be net profitable where I'd be a loser for sure if I didn't have that knowledge, because my natural instincts are terrible. But I'm not skilled at it. I don't have that. And I think to be happy, you should be doing something that you're skilled at. And in my case, I kind of felt books I did are good, and I'm happy with those. And hey, okay, fine. That's what I see my mission. I don't see my mission to be a trader.
Yeah, fantastic. I mean, of course, I mean, so these books have had a huge impact. I mean, the amount of people I know, I told them about this interview, and they're like, "Oh my God, I got that book from 3 people I know, and I passed it on to 3 people, so on." So, like, obviously, that's having a fantastic impact. I was going to ask, in terms of the pathways to success, how do people get control of their emotions? Is that something that is possible? Or if someone just can't handle their emotions just when the market is going against them and everything is going against the strategy, and they can't handle it? Because I feel like emotion is the biggest challenge for traders, right? And that's the hardest part. So have you learned kind of anything about how to get past emotion, or how to train yourself to just be less emotional at the times that it matters?
Yeah, I don't know to what degree you could train yourself to be less emotional, because that's sort of a part of your inner being, your particular makeup, how you react to stress and stuff like that. I don't know if you could really change that much, but what you can do is make it so that you don't have to make decisions under stress. And again, the best way you can do that is following confidence advice of deciding where to get out before you get in, because at that point you're totally objective. You don't have any emotions because you don't have a position. Emotions go with a position. No position, you don't have an emotional problem, right? Who cares? So as soon as you get into that position, your emotions will kick in, if that's what your makeup is. And so if you kind of decide where to get out before you get in and put in the stop, you don't have to worry about emotions, because as long as you don't pull your stop, you've now protected yourself, and no matter what happens, you're either going to be right or you're going to be out. And so that's the way I circumvent it. The way I deal with emotions is to just always have a protection on a position. The only exception is that if you are putting on a position not as a trade, but as a long-term investment, like an alternative. So a few years ago, I decided I want to have some of my assets in gold, just because I thought it might go up and over the long term. And instead of having some, that money in cash, that money. So I didn't. So gold go up and down. It didn't make any difference. I just kept them rolling over the futures contract. So that's an example where, and got out some 6 months ago in that trade. So now, and it's going up since then more. But that's besides the point. I mean, for the time I wanted, I held that, but that was not a trade. That was sort of an alternative way of holding assets. Without that as an exception, I always will have the stop on any position, so I don't have to have the emotional concern. I basically know what I can lose on a trade before I put it on.
And then from an upside perspective, are they very specific on kind of the exit, or do they kind of just let it kind of just run a bit more and adjust very quickly on the upside in terms
Basically,
of these successful kind of traders, right? Because obviously, it's good to protect the downside, but how far are they letting the upside run?
Yeah, I try to bring the stop in to close to break even or break even as soon as I can. And once I do that, then I don't have to worry much about it because the worst it's going to be is going to be a scratch trade, roughly.
Mm-hmm.
And so I try to do that if it goes my way as quickly as I can. Even the same day sometimes, or within a day or two. If it doesn't, then I can't. But when I can, I do that. And then I might have like an area, like I say, okay, if this is right, this is the first area. Let's say if it's a short position, this is the first area where I think there's major support. And for one thing, I'll trail the stop down over time and just do it that way. So I don't necessarily have a position that I'm going to hold until this point. I will just trail
Just
the
move
stop.
your stops. You move your
So
stops. Yeah.
that's the basic thing. And so I'll never get it the entire move because I learned from myself that, again, if you're trying to get the entire move, then you're going to have to ride out some pretty violent swings against you because very few trends, especially nowadays, go smooth. The trends tend to be very choppy even when they're going.
Mm-hmm.
So I find it easier just to have a trailing stop and I get stopped out. Then I have the luxury of, okay, I can look to get in again, if it's a short, on more of a rebound. So I don't always get it. A lot of times I'll miss the rest of the trade, but sometimes I do. It's a lot easier to handle that because I don't have to worry about giving back most of the profits if the move is going in my direction for a bit. So I've kind of mentally adjusted to say, hey, look, my goal, I know I don't have the emotional makeup to ride a whole move. I just don't feel comfortable doing it that way. So I'm dealing with my own kind of personality here and saying, knowing that about myself, I may as well just try to get the swing and I'll get stopped out well before the entire move is completed. But if I do, again, I might have a chance to get back in again. So it's not like it's over. And if I don't get in, at least I made money on the trade.
The number one kind of rule is to preserve the capital. And the second one is just to increase the capital, right? So is to not lose is number one. And also I think the trading strategy or the trading system needs to align just with how you work internally, right? And I think that seems to be aligned to,
And I would not use the words not lose because you're going to lose. And I personally will lose 3 out of 4 times at least. So it's not a question of not losing, but not losing much.
Much. And
much
is the way of putting it, of course.
As much as the key word. In fact, losing or learning to lose is probably one of the main lessons that come out of the books is that you have to, if you try to avoid losing, you're going to lose. Lose in a more major way. Learning to accept losses, that is just part of the game, is a very important thing.
And to minimize it and to have the exits in there and the stops in there just before you enter the trade, which most people fundamentally know, and yet few people actually follow through with. And then they FOMO in and out of trades and and that's when internally, they're all over the place, and I've have a lot of friends like that have lost a lot of money and then have integrated some systems like this where they're and now they have hundreds of indicators just to say, all right, cool, so sell or buy now, and so they've gone so far to have as much insight and then just follow the system. I actually had some dinner the other night, and my friend was like, he'd made a lot of money and he'd lost a lot of money, and now he's making a lot of money again, and he's like, I just can't even select anything anymore. I just have, he said, I just have to follow my system because I don't I can't, what's the words he said? The trust of his own emotions is just not strong enough. So it's a lot of money and he just has to follow his system now. And it's working, but I can see the conviction and I just follow along with him, right? Because I know that he's better than me. So, and because he has the passion. And he's just basically in it kind of constantly, but the best kind of people I know right now, or the most successful kind of people, have such kind of solid strategies and systems, and they have no emotion about the thing that they're in, like, and they will cut out like super
Yeah.
quick, because that's what the system says, you know. And so, and he's been kind of speaking to me saying, stop being so emotional, stop caring about that thing or that thing or that thing, and just have the system and just follow the system, and that's the number one rule. And like, I'm not that good of a trader, just to be clear, but like, I'm trying to learn these things. And so, but it's certainly something that you need that system to avoid the psychological hindrance that's going to be kind of the brain which you have, you know, because I don't think kind of like the instincts are that kind of good under pressure, you know. I think for some there are. And so on that point, how many people across all the people kind of who you've interviewed have gone by instinct, you know, versus systems?
How many have what?
Have gone by instinct, yeah. And so they
By
are basically
instinct.
in and out
By
just by
instinct.
kind of instinct instead of like advanced systems.
It's an
And if there
individual.
are none, that's great as well, by the way. But if there
No,
are
no,
some, that's really interesting.
it's some. It's some. So obviously, well, most of the traders I interview, most of the people with these great records are discretionary to some extent. They may have methodologies, but or even systems to some extent, but there's still always discretion involved. Not in all cases, but in most cases. Um, and but so some of them I've come across traders who have just very good natural instincts, and that's again, it's an innate trait, and it depends on the trader. So not, and I should say here that this intuition thing, right? It's nothing mysterious about it. What intuition, or we call it instincts or intuition, all that is kind of like subconscious experience. So they've like focused on the markets all day for years and have seen so many situations. And when they get their intuition, like saying, you know, something's wrong here or whatever, it's kicking in something in their memories. And whether they can explicitly say what it is or not, it doesn't make a difference. It is that experience that's there on a subconscious level. So there's nothing magical or mysterious about it. It really is part of experience, but it comes out as an intuition. And some traders have that, and it's important. And for some traders, not. It's really a matter of the individual trader. It's like, I'll give you a good example of that type of instinct. So this is in the first chapter of the first Market Wizards book, Michael Marcus. So he talks about one time he was bullish on soybeans, and he had a very large position, but he didn't have the maximum position allowed by the CFTC for a single trader. So I don't know if he had 1,000 contracts. I don't know what he had, but he had a really large position, but not the maximum. And a report came out that was really bullish on soybeans. And this is still when he's dealing, they're dealing with brokers. We're talking back now. I interviewed him in the 80s, but we're talking now about experience from the 70s, right? So, so his broker calls, really good news. It's like, the market's going to be limit up, and but Michael is kicking himself because he doesn't have a maximum position. So he puts in an order at the market just in case it should trade up, limit up for the remaining number of contracts he has that he could buy, whatever it is, 300, 500, I don't remember. So the market opens up, limit up, and within 15 minutes, he gets a call from the broker that he's filled on his order. And all of a sudden, it dawns on him, this market was supposed to go limit up 3 days or 4 days, and I'm getting filled on the first day. And instinctively, he calls a broker, and he starts selling wildly. He starts dumping his whole position. And in fact, he sells so much that he actually ends up net short. And he kind of oversells. He said the first time that he could remember that an error made him money, because he was so wild to get out of that position. He was just selling hundreds of contracts and just oversold by error. And of course, the market crashed after that. But it was that instinct that, hey, this doesn't smell right. I shouldn't have gotten filled. He realized, even though he had that order, he shouldn't have gotten filled. And so that's a perfect example of intuition.
And so, but he went against his system or his strategy, which
He
is
won, yeah, he
against the
thought,
rules. So that's
yeah,
kind of
yeah,
against the rules of everyone else, but then it worked in his way as well, right? So that's
yeah.
where
So
experience
he
comes
was
into
very
play.
bullish on beans. He had this very large position. He wanted to
Mm,
exit, but he realized the market was telling him that something is, the position is wrong. There's something wrong. This action says that's the wrong position, and he
yeah.
acted, instinctively and immediately to get out of that position.
Yeah, fantastic. And speak to me about FundSeeder. Yes. Yes. What
Yeah.
is
So
FundSeeder? Because I thought that was a really interesting
okay. So yeah. So
idea.
FundSeeder and
Mm.
FundSeeder, so for the website is fundseeder.com and fund FUND seed SEEDER fundseeder.com. So the idea was, hey, just like in my books, I find these people all over the world who may not be known, or in some cases they don't have access. If they wanted to manage money, they have no means of that because they don't have the pedigree or whatever. They just happen to be very good traders. But the idea was there's probably people all over the world, lots of people who are not that there's a large percentage, only a tiny percentage of traders would fall into that category, but there's so many tens of millions of traders globally that you only need a small fraction that are really good to make a difference. And the idea there's probably a lot of traders out there that are really good, have found their methodology, but don't have access to capital. So FundSeeder is like two companies. One is technology, one is investment side. The technology side provides free metrics, performance metrics for traders to get like analytics charts on their performance, stats on their performance, and that's free. And the idea there is you're trying to get them to get on the platform so you can find them. And then the investment side of the company or part of the company is looking to identify traders that can then be used for a management product. And so this year, actually, just very recently, the first fund got started using traders off the platform, essentially. And so what it is it's a way for people to get free analytics, but more importantly, for those traders who would like the chance to manage assets, if they are really good, it's a way they could get access to manage capital without having, gone to Princeton necessarily, or have worked for a hedge fund, or know anybody, or be in the right country. I mean, they could be anywhere. So, a couple of these traders are, in Portugal or whatever. I don't know, just places you wouldn't associate with having really good traders.
Mm. And so does that mean that a person like me, I can sign up and can invest in somebody's fund who I like their kind of track record? So this person's, say for example, who you're interviewing for this latest book, the name who you cannot say,
Yeah.
that turned 50K into 500 mil. Can we follow that person, or is that
No.
person
Well,
holding
first of
their
all,
own kind of,
yeah.
you know what I
So
mean? Or are those the kind of people that are potentially a part of the platform that we can have a look at kind of their kind of
yeah.
track
So
records?
that's like say that type of has no is so much money he's not interested in managing anybody else's assets, and in fact at this point he's made so much money he's looking to be doing other things and sort of
Mm-hmm.
investing in other things and doing philanthropic work and stuff like that.
Of
So
course.
the
But
thing
there's
is
those types of people in there that are just like
that there
kind
are
of
people, yeah.
starting out
So
mostly, yes,
yeah,
like in the
yeah.
beginning.
Well, they may have a number of years, they may have longer records as well, but essentially it's not a platform for somebody to go on and invest in specific traders. Basically, it's a platform where FundSeeder can take certain of those traders and put them in a multi-trader fund, and
Mm-hmm.
people could invest in the multi-trader fund essentially.
Okay. And are there any kind of limitations on kind of who can invest in those funds, or is it just open to
Yeah,
the general market?
it's like any type of hedge fund. There are sort of minimum capital requirements, and there are in line with normal
Okay.
regulations, whatever is required for people to invest in an alternative investment.
So that will be, we'll put the link in the show notes so everyone I can access that. So what's the next book? Because, yes, what's the next book called? And when's it going to be launching? And You already spoke about the one example of that book, from that guy who turned kind of
Yeah,
50K into 500 million. But who else are you interviewing? Like, and what's kind of this book about?
So
What's
this
coming
book
next?
is the focus is we started doing, and this is the first book I'm doing with a co-author, as I said, a fellow named George Coyle, and we ended up with having too many traders that it looked like we were just going to end up with too much text, given the chapters we were writing, given how much text that was, and then how many traders we'd interviewed that still were not, unwritten, and was still doing some interviews and so forth. But it became clear we couldn't fit this all into one book. So the idea then was to split them into do the solo traders in the first book and do the hedge funds in managers in the next book. And so right now, and this book is still being written, and the way the publishing world works, not because it takes that long to get printed, but because they have to do these marketing programs, and these things are like fashion. For the major booksellers, they've got to provide the list of the spring list, and the spring or summer list is like provided in the fall of the previous year type of thing. So there's a long lag time before the book actually appears. And as I said, we're just in the midst of writing it. So this book really won't come out until next summer. And it's like every other book in the series. It has Market Wizards in the name. This one will be called Market Wizards: The Next Generation, basically. And it's almost all the traders in the book are on the young side. So this is certainly by far the youngest cohort of traders I've ever interviewed. And so it's basically the focus is individual traders, almost all of them who are also young, considering that we're looking for traders with at least 10 years track record. Obviously, there's a limit to how young they could be. But for a book like this, well, some of them are in their 20s, and even 30s, of course, is very young. And so right now, the oldest one so far right now is 41, but there's one we're still interviewing who will break that mold, but he's got a really great record. So there may be one in there that's like 50, but basically the focus is more on individual young traders in this book.
And so what are some highlights from this book already? Or some key insights or something that you've learned from these interviews that you maybe haven't seen before, or something that was a fresh insight, or something super interesting?
Yeah, there's probably a number of things. But from a personal standpoint, I guess doing these interviews, it's made me personally focus more on shorter term charts, because I see so many of these traders, even if they have a longer term idea, are executing with the aid of shorter term charts. And so it's made me pay more attention to shorter term charts as a way to add to positions with very close stops and stuff like that. So
how short?
Not as extreme as some of these traders are down to literally 2 minutes and 5 minutes.
That's what I thought. It was going to be like that quick.
Too short. I just can't get to that level, and I don't want to watch the market like that. So for me, short is 1 hour and 15 minutes. Those two. It's really a way to just add to a position with a very close stop, and so the percentage hit rate is very low, but I'm risking so little on these trades, and I'm doing it. It's sort of saying, okay, here's a formation. It looks like it really, if it's going to go here, it should just break down right now. And so I could go short there and have a stop really close. And most times I get stopped out, but it's but it's a way of fine tuning. You can't do that with daily charts to get it that close. You can't do it. And I've used it mainly for myself as a way of adding on to positions where, maybe I would hold 3 times as much as I would normally hold, because the second 2/3 is put on with if it works, like most times it won't work, but the occasional times it does, I get to add the second 2/3 with really close stops. So basically, the potential would be 10, 20 times of what I risk on those positions. So most 8 out of 10 times, 9 out of 10 times I'll get stopped out, but the times it works, it kind of makes up for that.
So for these younger traders, are there any specific kind of asset classes that seem to be kind of popping up kind of more these days than others?
No, I mean, traders it's the same liquid markets as others. And so it's typically equities. It's always equities and futures that's the focus of these books. So no difference there. I guess what I've surprised that is a few of these traders made their initial success and the original building of wealth was on small caps, which is an area that I personally never look at, but for them, they find the inefficiencies there.
Yeah, fantastic. Jack, this has been a great conversation. I'm just conscious that we're almost at time. How do people connect with you? And well, before that,
Sure.
If you could give just one piece of advice, just to all the people who've read your books, who love your books, who buy your books for others, right? Like the biggest thing which you've learned that can help the most amount of people who haven't achieved that success just yet. Yes. What is the biggest piece of advice just before the conversation is wrapped up?
Okay, without repeating, of course, a number of the things we've talked about would fall into that category, right?
Yeah.
But of something that we haven't talked about, I would say is don't think that you could copy somebody else's strategy and be successful. You can learn from somebody, you can learn from lots of people, you can pull certain things from different people, but ultimately, virtually every trader I interview has developed their own methodology. Now, their own, and in quotation marks, their own methodology may be 100% other people's methodologies. And there's one trader in this book that says, I haven't invented a single thing. As a definitive statement, nothing I do is new. I haven't invented a single thing. But what he's done is he's taken different things from different people and put it and found out what works for him. So ultimately, it's a matter, you can learn from other people, you can take from other people, but ultimately you have to find things that you believe in, that fit your personality, that you got to make it your own. So don't think that you can just go and buy a system or copy somebody else's approach and you're going to be successful, because you won't have their conviction, you won't have their particular talents to make that strategy work. You've got to find your own strategy, even if it's learned from other people. But whatever you put together as your methodology has to be your own.
That's a great piece of advice. And I think that's an excellent piece of advice, especially on the point around conviction, right? Because you can follow someone else until it matters and until their size. And then all of a sudden, you're just like, what do I do now? So I think that's a great piece of advice. How do people connect with you? And yeah, let's go there.
So I have a website I did years ago, and I honestly don't update it. I just don't want to take the time to update it, but there's some stuff on there. And that's just jackschwager.com, my name.com. And on Twitter, there are times I post a fair amount. There are times I don't post at all. But my Twitter handle is @my name, Jack Schwager.
Fantastic. So highly recommend that this is something that you follow, but also just buy the books if you haven't already. They're fantastic books and they give you the psychology and examples and all the thinking. And it's going to be just a fantastic way. Like if you want to get kind of better at the psychology of trading and understanding how successful kind of traders actually think and how they operate, highly recommended that these books are purchased. And like, I just can confirm that this is the #1 book that the most successful people I know have sent to me and have given to me and have given to others, right? So that does say something. Jack, thank you so much for coming on the podcast. Sure. This has been such a great conversation, and I really look forward to seeing that next book and hearing just more about that genius who made 50K into 500 million. But thank you so much for coming on the podcast today. Sure. Yeah, and we'll talk soon.
Yeah, nice chatting with you. Hey, take care. Bye.
Bye. Thanks for listening to the Growth Manifesto podcast. If you enjoyed the episode, please give us a 5-star rating on iTunes. For more episodes, please visit growthmanifesto.com/podcast. And if you need help driving growth for your company, please get in touch with us at webprofits.io.